Well, I started off in 1995 when I left the University of Auckland with a Bachelor of Commerce in Economics, and I was going to take a holiday job at a stockbroking firm before I went on and did my master's degree. And I was very fortunate, and I fell into a job in a stockbroking firm and became a junior analyst from what has now become a very successful value investor who works for a firm you may know, Pico Holdings, out in La Jolla. And as with all of these things, I ended up staying on and never went back and got my master's degree and just carried on in stockbroking. And in 1997, after that particular person departed to the US on the next stage of their career, I left and went to a firm called JB Ware and moved to the institutional side of the business, facing customers, and really started to deal with our US customer base, because if you go back to the late 1990s, New Zealand was a value market, and JB Ware was an Australian and New Zealand stockbroking partnership that really specialised in that part of the world, and we cleared a lot of flows for the global brokers. So we had a very strong US business, a very strong domestic franchise as well. And I stayed there until 2006, and in the early 2000s Goldman Sachs came in and bought part of us, and when I was 29 I was made a partner there, and I left when I was 33. And really why I left was, people probably scratch their head and say, why would you leave when you're a partner so young? Really it was about the challenge of setting up a funds management business. And New Zealand is relatively unsophisticated as compared to the United States or Europe in that regard with funds management. And we were just embarking on what I think will eventually be some kind of compulsion in savings. We had no savings scheme at all as compared to Australia, which you have seen take this huge step from the 1990s, where Paul Keating dragged them kicking and screaming towards compulsory superannuation, and now I believe they have the fourth largest savings base in the world. New Zealand unfortunately hasn't done that, but we did embark on a non-compulsory scheme, a voluntary scheme called KiwiSaver, and really that got me thinking that the game was changing. And really, if you looked at the broking business, the traditional margins were under pressure, capital commitment was going up. Whereas funds management had this potential tailwind behind it. The tailwind, it's fair to say, has been interrupted by the financial crisis, as people have just the only thing they've wanted to do is put money in the bank versus taking equity market risk. So that has presented its own set of challenges in continuing to raise capital, which is vital to a funds management organisation.